Article 11, paragraph 5. Now what can happen is that in some cases, the person who is receiving interest, the foreign company or the foreign bank as the case may have a permanent establishment in India, right? The issue which arises is, if a PE exists, would the taxation of interest be continued under Article 11, or in cases where such interest income might be in the nature of business income of a recipient, should it be taxed under Article 7 read with Article 5? Let us see what Article 11, paragraph 5 of the India-USA Treaty has to say about this. The provision of paragraph 2, which is the right of the source state to tax interest, and 3, which is certain exceptions to this rule, shall not apply if the beneficial owner of interest. The stress is again on the fact that the person who is receiving interest should be the beneficial owner of interest, right? Being a resident of a contracting state, so let's say we are assuming that the person is a US resident, carries on business in the other contracting state in which the interest arises. So the interest should arise in India, right? And this person who's the beneficial owner of interest is carrying on a business in India through a permanent establishment situated therein, which means situated in India, right? This is the case when you're dealing with Article 7 read with Article 5, or performs in that other state independent personal services from a fixed base situated therein, and the interest is attributable to such a PE or fixed base. In such a case, the provision of Article 7 or Article 15, as the case may be, shall apply. So if the beneficial interest owner is carrying on business in India through a PE, but not only is he carrying the business through a PE, but the interest is attributable to such PE, then Article 7 will apply. In case of independent personal services, if a person is rendering such services from a fixed base in India and the interest is attributable to such fixed base, then Article 15 will apply. So what is a PE situation? So suppose there's a foreign company which has a PE in India, and there is an interest which is paid by an Indian company to the foreign company. It was held that if interest paid by the Indian company to F1 is effectively connected to the PE in India. Why? Because the loan contracted by the PE, which shows it is an asset. So if the PE, while drawing its books of accounts, shows the loan given to the ICO as an asset, that's a fact which corroborates that the income is attributable to the PE or is effectively connected to the PE. In some treaties, you may not find the word attributable. It may be effectively connected, right? The loan is contracted by the head office, but the proceeds used exclusively by the PE, right? So even though the loan might be contracted by the head office, it takes a loan, okay, and pays interest. Now this is another example not relating to these facts. So suppose the foreign company takes a loan from a lender. This entire loan amount is given by the foreign company to its PE, which uses the proceeds, right? And the interest burden is borne by the PE. In that case also, it will be deemed that the interest is arising in India and is attributable to the PE, right? If a loan is contracted by the head office, but the proceeds are used by several PEs, if there is no interest which is borne by the PE in India, then nothing will be taken as arising in India or paid taxable in India. The interest income in such a case is taxable as business profit under Article 7 after deduction of all expenses. Now this is something which is interesting. when a PE exists, when the profits are calculated under Article 7, the interest is not taxable on a gross basis. It is taxable on a net basis after deduction of expenses, right? Interest paid by a branch of a foreign bank. Now, this has been an area where there were a lot of litigations. So in these cases, what used to happen was that the head office of a foreign bank used to give a loan to a branch. This branch used to make payment of interest, right? It was held that the interest paid is not deductible while computing the income of the branch or chargeable to tax under the local laws of India, since it was a payment to self, right? However, in certain treaties, there was a deduction which was allowable to the branch for payment of such interest, right? A special bench was constituted in the case of Sumitomo, which held that there was no liability to withhold tax insofar as the branch is concerned on the payment of such interest. But now the Finance Act has actually enacted a provision which says that the withholding tax is applicable for interest payments from financial year 15-16 under the domestic tax laws, but it will be subject to the beneficial provision of the treaty.